Welcome, Avi. Just a quick mic check. You can hear me, yeah?
Yeah, I can hear you. Can you hear me?
Yeah. All right, let's get into it. Welcome, everyone, to our first RISE sessions. So the concept behind this is no scripts, no polish, just us talking openly about what we're building, what's working, what's not, and really a chance for us to get closer to the community and for the community to get closer to us to understand what's going on, what are we building, how can everyone get involved. So I'm excited to kick off this first session with Avi. Avi is the GM of RISEx. I probably speak more to Avi than I have my wife, at least for the past 3 months while we've been polishing RISEx. She's a little suspicious of who this Avi person is. I'm always texting. But it's been awesome working with Avi to get this thing polished. The man knows his stuff. But yeah, Avi, do you want to give a quick introduction to yourself, intro to you to the community? I know you've been on a previous space with the community, but just assume that no one's met you before.
Yeah, definitely. It's good to meet. Well, I mean, I'm not meeting all of you guys, but it's good to talk to all of you guys and jump on a stream with Sam and talk about a lot of the like the really cool technology that we built. I don't know if anyone's seen the rollup.wtf, but like we're all pumped. Quick background on myself. I have worked in and around like the crypto space for quite a while now. Worked at multiple different crypto prime brokerages. So working with market makers directly, creating a market making business, and then also working on working with VCs on, like managing their treasury. Most recently, I built the perp stacks on top of Base, and then we got integrated into RISE, where we are, taking previously we had built like a hybrid perp stacks, right? So an off-chain sequencer, and then you would batch everything on chain. But now we're taking this ambitious project of building it all on chain and all on RISE, and really taking where we think perp stacks should go. It's really fully on chain on one state. So yeah, that's a quick background about myself.
Brilliant. All right, let's dive straight in. So I want to kick things off with just talking about our upcoming launch. So as we've shared with the community and leaked a little bit, we're planning on doing an invite-only launch. And I just wanted to add a bit of context here. And I've got an article coming out where I'll dig into a lot more detail. But just to give a bit more insight here, the reasons we're doing an invite-only launch is really threefold. One is the technical complexity of what we're trying to do. So we are the first team to build a fully on-chain EVM, so fully programmable EVM on-chain order book that has the kind of performance that you'd expect from a centralized exchange. And it's a mouthful. There's a lot of benefits to it, but also a lot of work. We have to build not only the fastest EVM chain in the world, we then have to bring those order books on chain, make sure that we're getting very, very high performance and performance when there's like spikes in the market, etc. So it's a big job. And so to do it well, we really have to, we can't just launch it on day one and welcome in thousands of people. It's just going to take a bit of time to wind things up. And really, we want to build a world-class product here. We want it to feel as good or better than the top players in the market. And to do that, we're going to have to do this iteratively. The second one is liquidity for an exchange is the product for the most part, particularly an order book exchange. So we need to build up our liquidity, and this is something that takes it also takes time. It's a bit iterative. It's like this growth. If you get takers coming in, you get makers coming in. You get takers coming in. It's kind of this like organic growth, and we're going to be working on that quite a bit, because when we do fully open the doors to everyone, we want to have world-class liquidity. We want to be on the top stage. And then finally, I think number 3 is it gives us an opportunity to really experiment with composability. First of its kind, having fully atomic composability with an order book at this kind of performance. So giving us a bit of time to experiment in the spot, get the spot books up, do some money Legos, sort out our XLP looping. So some interesting stuff, but doing this invite only means we can both manage the product quality as well as security at the same time, and just grow in a really sensible manner, more like what you'd expect from a Web 2 company, less than Web 3 is really a lens to look at it. So I think that's that gives a bit of context on that. Avi, did you want to touch on anything else regarding the invite-only launch?
No, I think you nailed it, and I think especially the part around scalability and like being able to grow the exchange properly is really important, and why we want to keep it invite only, because right, like at the end of the day, liquidity is our bread and butter. Like if we can provide good liquidity, really good execution cost, then we can provide a really good product, right? So by doing it like invite only, like Sam has said, like this allows us to scale the liquidity properly, build our XLP vault properly. And we'll be looking at, like our uptime of liquidity and how the UX is, right? Because that's also very important. And, UX for both, front end traders as well as API traders, right? Like it's not just, like one user that we're, building for. We're building for multiple different users, because at the end of the day, the exchange is essentially just like a place for people to put a difference of opinion, right? So that's how we think about it.
Yeah, absolutely. It's a perfect segue to the next segment, and I'll share my screen. I want to bring up this post. Did it work? Oh, am I showing the wrong tab?
I can't see your screen.
Apologies. It hasn't come up, has it?
No. Yeah.
We're there. So this is a post I dropped earlier in the week. So what you see here is actually the gas usage of RISE compared to the other L2s and Ethereum in the Ethereum ecosystem. And so what gas usage is really a measure of execution computation. It's how your transactions on EVM chains are priced. It's kind of like how much work are you asking the chain to do for you, and how much are you going to have to pay for it. The cost component for us isn't as important as the raw execution. So what this is saying is that our raw execution is more than Ethereum and all of the other L2s combined right now. And that's not saying that we have as many users as Base or as many users as Polygon on. It's not the case. But what this is indicating is that the base level for being able to run a fully on-chain order book is very high. And why this is important to both the community and the team is that when we first set out to build RISE, it was on this thesis that there was an execution bottleneck, and it was limiting these new it was limiting the opportunity to build particular applications, particularly order books. And so why this is special to us is that this demonstrates that thesis in reality, that yes, it does. You do require this level of execution to actually deliver an order book. And I think before digging into the weeds, Avi, I'd like to ask you why is this important for traders? Why is this kind of performance important for an order book if we're trying to do this fully on chain?
Yeah, definitely. And I think we can talk about like different order book transactions, right? Because what actually goes into the need for really strong performance, and also the need for a lot of gas for order books, is like the fact that, right, like an order book, when you think about how that liquidity is provided, right, it's literally like a couple market makers, or even just one or two market makers, that are having to place quotes around the midpoint, right? They're essentially trying to price the pair on that order book. And the way they do that is usually there's a leading price venue, right? So like right now in crypto, it's pretty much Binance. All these market makers are looking at Binance price and trying to update our price based on what they see on Binance. And the really important thing for them is to be able to cancel and then replace orders that they have on the book, right? Their biggest fear is that, like they don't see the newest state of the book, or like, they can't get a cancel in fast enough, and they get picked off on stale orders, right? So being able to update the book very fast and having really strong performance of, like the chain to update that state of the book is important for the liquidity, right? Because when you compare it to like an AMM, that's just like passive liquidity sitting there, you deposit and it doesn't do anything. While liquidity on an order book is constantly updating. They're making like 10 ladders, right? So it's really important. And then I think, Sam, can you talk a little bit about, like why order book consumes so much gas, and like why we're, just shot up to number one while just, starting to even build initial liquidity on the venue?
Yeah, one thing I want to iterate, this is day one. We're not spamming transactions. This is the base level execution that you need to be able to run a fully on-chain order book. Why it uses so much gas is because for every limit order that's landing on the book, and this is fully on chain, for every limit order lands on the book, we have to do a margin check for that account. So if that account has 15 other limit orders open and then 10 positions on different markets, we have to run through all of those and check that the margin is there, compute that, and like make sure that they have enough margin to place that order. Otherwise, we have to reject that order and cancel it. That's on one side of it. That's on the making side. Then on the taking side, if you put in a market order or you put in a limit order above the BBO, outside of the BBO, that's got to work through the order book. So you have to walk down the tree that is the order book and take each of those orders, and at each of those stages, you have to compute the match. So it's interesting that the making of the book is actually uses much more gas than the taking. So if you're a trader that just wants to jump on the platform and take a position, it uses far less execution than the market maker is building the books for you. So yeah, that's where the vast amount of the actual computation comes from. We've got a lot of room to optimize this, and we've got a lot more headroom. Fortunately, RISE is very, very fast, so we're going to be able to grow quite a bit. But there's still work in optimizing this. Now, why are we doing this? Why are we doing this the hard route? Avi, I wanted to ask you from the trader's perspective. I come from DeFi, so I'm very focused on money Legos. But from a trader's perspective, why is composability, like what's the value in composability in having these books on chain?
Yeah, so I think like the real value in composability, and when traders are, like if you're a trader and you have capital, you're really just looking for efficiency on your capital, right? And you're just looking for ways that like your money is always working for you, right? So if you think about traditional markets, at least like in like the really big countries, like there's always like an inherent interest rate on your dollar, on your euro, that when you park your dollars in like a brokerage account, like you're getting that money market rate, right? Like your dollars are constantly working for you, and that doesn't really exist in crypto, especially in perp dexes, where a lot of people are holding a lot of idle capital that essentially isn't doing anything for them, right? Like the treasury market's one of the most liquid markets in the world. You can even go leverage your treasuries so you can earn like 3% while like you're using it as collateral on like a margin position. And that's not really happening right now in DeFi. And there's so much idle capital. Like if you go look at other perp dexes and the amount that's sitting there that needs to be used. And this is where composability gets really interesting because, right, composability essentially just gives you the ability to do like a transaction in one atomic state, right? So with that, like you can really bring what we call like portfolio margining front and center. And what I mean by this is, let's say you have Bitcoin, right? Like, and you don't want to sell your Bitcoin. Like you still want to like have that upside, but you're a little low on cash, and you can't take this other perps position that you want to take, maybe in like an alt, or and someday like maybe in like oil, right? Like leverage your Bitcoin for oil. That'd be cool. But like what portfolio margin allows you to do is essentially like borrow against your Bitcoin, so you get the USDC or whatever, like USDT, and then you can take that position in the market, right? So composability allows us to also like add more leverage on that, because we can essentially manage that risk in that same state. So that's why, like from like at least a trader's perspective, like composability gets really important, right? Because you can earn on your idle capital, you can essentially get more leverage on your spot holdings, and then lastly, I think Sam, you've touched on this. It's also like tokenization of like strategies, right? Like you can run the basis trade and then tokenize that basis trade and sell it off to someone else, or like use that as collateral while there's still like recurring cash flow going towards that strategy, to that token itself. And that's all programmable. So I think that's like really cool. And back to like more of the money Legos thesis as well.
Yeah, absolutely. Like for the programmable vaults, there's vaults. Other competitors have vaults, but the key thing here is that you can do it with the EVM and it's fully composable. So say you want to set up a basis trade vault, which is probably the biggest strategy in crypto. Like it consumes the most gas. It's what's behind Athena. You want to set that up. To do that, you need to either use a lending market, or you need to swap into like a swap on spot or trade on spot and then short the token on the perps dex. And being able to do that all with one shared state in an atomic fashion, it means you can say, okay, I'll open a spot position at this price and I want to short at this price. And if you don't hit those prices, I want you to reject both those orders. And so it means you can have confidence in your execution that it hits your requirements in an atomic fashion. This actually isn't possible elsewhere. You can't do this off-chain either on Binance. You have to you almost have to have a god tier latency advantage to be able to do this. So there's that and many other things you can build with it. Which brings me to the next topic I wanted to touch on. So this is the perps landscape, and one of the biggest questions we get is there's a lot of perps dexes in the market. What's special about RISE? What are we on RISEx specifically? What are we bringing to the table that warrants us investing our opportunity costs and so much effort into this? So Avi, I'm keen for you to take that one. From your perspective, what really makes us special?
Yeah, definitely. So I think there's a certain amount of like table stakes perp dexes need to have, right, just to even survive. And obviously, like, I think, Sam, you've heard me talk about this so many times, is just like liquidity. Like, you need to have good liquidity in your markets. That's the main product you offer, right? But that also is table stakes for any exchange, right? And it's kind of like, how do you get this liquidity, right? So, like I was saying before, a perp dex is, or like what a market is like enough competing views in the market. So like not everyone's trading with the same edge, right? Like I want to be able to take against you, Sam, as like a maker, where like my dollar that I'm buying off you is not essentially, like eroding your edge, and like it's not seen as toxic. And I think with the whole focus on, different mechanics we put on the venue kind of will drive a lot of this. So one of the first ones, and kind of like really technical ones that I find really interesting, is the fact that we've removed clamps on funding rates. And this has been done with like a lot of research with, different market makers we've talked to, but it goes hand in hand with the idea that like, like right now there's certain clamps that other exchanges put where there's a dead zone that the funding rate doesn't change, right? And what this means is maybe funding rate arbiters won't be as incentivized to come in within this range and actually, trade against a market maker that's off skew, right? So we're thinking like at that, microstructure level, like how can we enable different types of gamification on the venue? So I think that's one, just being really thoughtful about different levers that we can pull. But it goes back to like the whole composability aspect. It's the fact that like you can tokenize different strategies on RISEx, right? So what that'll do is they'll bring in traders with different views that want to maybe run a basis trade, or you want to run a long short, or like a pair trading strategy, and that'll also like bring different types of flow onto the venue, right? So I think that's kind of like our North Star, is like, how do we make a really good market? And to do that, you just have to offer different features and tweak different things on the exchange to give people different kind of like gamified reasons to trade. Actually, I'm curious from your side too, Sam, like what are some other things that you think we've done to kind of drive uniqueness, other than like, like some of these like microstructure changes, also like on like the shared state? I would love to hear more about that.
Yeah, it's interesting. When someone asks that question, what they're expecting is this big flashy feature that changes the world. But in practice, what's really important is doing the basic things really well. And those basic things, in fact, are not basic. Like the microstructures of liquidity in a book are probably the most important thing in launching an exchange. Like the CL had a really great tweet that you shared with me yesterday. In the early days of Hyperliquid, when they had sparse liquidity in the order book, what CL was doing is he'd jump into the order book and just periodically put big taker orders that would sweep up a few bips into the book. And his motivation was for that was that he really supports this project. He wants it to do well. The best way I can help that project is by helping grow the liquidity, but I'm not a market maker. However, I can attract market makers by taking into the book. And so you have this like iterative where CL's taking market makers and monitoring the exchange, and they say, okay, look, there's actually some opportunity. There's some uninformed flow here that I can capture an edge on. They jump in and build it up. And I just wanted to raise that example because that's like one one component. There's also like funding rate arbitrage to build the stability and the liquidity in the book as well. So many details go into that are really important, and it's actually where we put a vast majority of our time. But taking a step back, looking at RISEx and RISE and where we do have the key differentiation, I see the fully on-chain composability as a systemic edge that we have on the market, that we can bring. We can attract different kinds of users because it's fully on chain. They can connect with their Fireblocks account. They can deposit into products that they're familiar with, like a Pendle integration, for instance, on Ethereum. This kind of stuff is just really low friction for us because we're EVM, we're fully on chain. We already have builders integrating with us now that are doing integrations we hadn't even thought of because it is so programmable. So I think long term, like short term, building a great exchange is the be all and end all of what we need to be doing. And then the systematic edge of being fully on chain is what compounds over time. That's really the lens that I look at it. All right, let's jump into the next question. And this one is probably, I find the most interesting, except for my passion for microstructures, that is assets and like what's coming next. And I think perpetuals markets are in a really interesting spot today, where there's been a flight of liquidity and frankly interest in bidding crypto tokens, but perpetuals give us an opportunity to offer exogenous assets outside of crypto, which is like the run on oil and hyperliquid being the weekend price discovery is absolutely game changing. That's if we spoke about that happening 12 months ago, people would have thought you were crazy. So let's jump into that. Avi, what assets are we going to have live early, and then tell me about like our expansion plans for listings.
Yeah, definitely. So I think to start, like we're gonna, again, we want to like be thoughtful about how we grow the venue, right? And that's building good, strong liquid markets. And to do that, to be honest, our core is in building strong crypto markets. So that's what we will be starting with. But as we move forward, right, like we definitely want to get, I think like gold and silver and like the metals up, because those are, highly traded assets. People love to like touch them, and like they're constantly moving, especially in today's market. And then more move into, I would say, I think like trading FX on chain can be very interesting, especially in perps form. It's like it's the biggest market in the world. The FX markets are the most traded markets in the world. And they impact everything that is geopolitical, essentially. So those are really interesting. And then I would say, like, even moving forward, listing is also kind of thinking like what to trade in the future, right? So this is where we will work a lot with the community and understand, right? Like, what do you guys want to trade, and how can we go and get that listed efficiently for you guys, right? So that's a big part of, like how we're thinking about it, whether it's like going into, Indian equities and building like perps markets for Indian equities, because, the Nifty 50 is the most traded market in the world for options, right? So there's a lot of demand that is kind of like pent up in these different regional areas that, we want to go unlock and say like, hey, like you want to trade, Tata on chain, like we can give that to you. Or even like I mean, it's like everyone wants to buy Samsung, right? Because like they're the guys that are going to have the next big fab after TSMC. So it's like, how can we unlock that for you? And then you can also trade it, on leverage. But there's a lot of different fun like things that we have to do around like pricing with like having it in USDC and stuff like that. But yeah, I think that's how we're really thinking about, asset listing.
I'm going to put you on the spot here, Avi. No one saw oil coming. Actually, probably a lot of people did see oil coming, but we've had the gold run, the oil run. Commodities have been quite hot. What do you see as the next category or next like assets that you think will grow in volume on chain and perps?
Yeah, I actually think commodities are really interesting. I think, Sam, we've talked about like trading beef. Like I don't know if you've seen the beef chart. It's just like up and to the right. So I think that's like, commodities like those are like really interesting for people to trade, like wheat. I mean, I think like just going with like the nuclear aspect, like people really want to trade uranium. Also because there's a lot of new like need for nuclear energy. This one's kind of out there, and I think, I mean, this is like something I think that's starting to pop up is, trading compute or being able to trade the price of different semis like H200s or Blackwells on chain. I think is like really interesting. It's like kind of like an untapped area. Obviously, really hard to price those markets, but like those are like essentially turning into commodities, right? Where you need to, let's say, I know I'm going to need X amount of compute around December. Like I want to like, hedge that somehow or like, bet on that, right? So I do think those markets are going to come up in the next couple of years. So those are really interesting as well to me.
Absolutely. I think for some of those newer markets that don't have deep liquidity on traditional venues yet, have the opportunity to find price discovery on chain in perps as well, which opens up it has the potential to bring a lot of users to on-chain perps. So it's honestly like there's a lot of the spot token prices in crypto make for a rough landscape, but I think there's so much opportunity here, and there's so many markets that have underserved users because they want to access assets that they can't. Like I'm in Australia, we're running out of oil. My local petrol station has no oil. I'd love to put a bid on. I did put a bid on oil to hedge it, and I'd love to put a bid on beef, but I can't right now. So I think there's like real world use cases that everyday people will want to get access to. Absolutely.
No, I definitely agree. Actually, Sam, I know, like we're already at like 27 minutes, but I'm also curious to hear from you, like what kind of markets are you interested in? Like obviously like beef and oil, but like especially big, like I've never been to Australia. I don't know really like what people trade there other than crypto. So like I'm curious, like from like the Aussie landscape, like how do you think about it?
The funny thing about this is that regions are so siloed in the assets they want. There's a lot of overlap with US equities. Everyone wants to trade US equities and global commodities, but in Australia, there's a large portion of holders that are holding the big four banks, for instance. So if we wanted to target Australian users, we'd set up a smooth on-ramping and then support the big four banks and some pharmaceutical companies, because the top 10 equities in Australia are pharmaceuticals and the big four banks. So I think it's really it's going to be a case by case, and the way I look at it is that we kind of have to make a bet because there is a cost to listing assets. It takes liquidity to build it up. It takes energy and also capital cost. So we have to front that with the expectation that there's going to be interest in this token and in this asset, and traders will come to it. So yeah, I think commodities are going to continue being interesting. Are going to attract the most attention, as well as anything associated with AI stocks. I think the regional, like Combank, for instance, the Commonwealth Bank of Australia, for instance, its equity won't be on the global stage for like on crypto ever, but there might be a very active community of users that wants access to it. So I'm kind of interested in this, like global is going to be the focus, but I do want to experiment with some regional assets as well, because I think there is potential there.
Yeah, I definitely agree with that.
We have to fix the on-ramps. That's where FX and spot FX gets really interesting, but I won't dive into the weeds there just yet. Awesome, we're almost at half an hour. I might just have a look through and jump into some questions, maybe 2 or 3. Okay, the first one. How does RISE-Chain make open order books actually work fully on chain, solving speed, liquidity, execution challenge that most DeFi platforms struggle with? Yeah, this is a good question. There's a lot of moving parts, both technical and commercial, to make this work. I'll take the technical stab to start. The technical stab is that to do this, like the base requirement to have a high performance, like a tier 1 exchange, that is order book exchange, is you need to have your latency down to about 1 to 10 milliseconds, or like you can probably go up to about 20 milliseconds if you need. You need to be able to support about 1K TPS of open orders, trades, cancels, and even more if you want to scale your markets in a parallel fashion. And then you have to sort out the economics. The cost of users to trade has to be competitive in the market. So on the technical front, we've built the fastest chain. We can, at the fastest EVM chain, we're able to do 1 millisecond execution, and we do that by building a block continuously rather in these like discrete chunks. So Base, for instance, they're building in, they do 200 millisecond, like I think they call them flash blocks, which are sub blocks, but they're still at a discrete interval. We do it continuously. Your transaction hits, we execute, we propagate that throughout the network. So on the base level, we've solved that for both speed and performance. Then for the chain itself, the order books itself, it's really just a technical challenge of building the order books in smart contracts and putting them on chain. Simple in concept, but optimizing it and having this trade-off is like what component has to be off chain, what component has to be on chain. We've found a really good balance that we're quite happy with, where a vast majority of what's going on is actually on chain, and like we've spun up a June dashboard and we can see exactly what's going on, which is like really exciting for someone who trades on centralized exchanges and perp dexes, and a lot of this data is really opaque, but you can just see it all. You can index what you want. It's there's just a lot of opportunity there. So yeah, I might pause there. Did you want to add anything else on that question, Avi?
No, I think you covered most of it. I think like the only thing on that is like the liquidity aspect. It's again like that takes time, but that's again just bringing in like it's really just having very liquid books for people when they jump on the venue, and then naturally when you have liquid books, when you have good execution costs, that naturally will build liquidity on the venue, right? Because people will come, they'll trade. People that are trading like programmatically will set up whatever strategy that they're running, and if you have good if you have really good spreads, then like they'll end up making more or taking more, right? So that's kind of how you build that liquidity, right? But you have to focus a lot on like your initial markets.
Absolutely. All right, I've got a great question here. What are your long-term sustainability plans? So how do we? I'm going to answer this. Assume that it was asking from a commercial standpoint. One benefit of launching, like leading our ecosystem with a perpetuals DEX and also a spot order book, where we're bringing something unique to the market. One benefit of doing that rather than launching the chain and relying on getting enough growth on the chain to hit a point of break even and then entering profit, is that the product that we're offering clearly has in at least the market product to market fit, and I expect us to find product to market fit relatively soon. And with that comes the revenue that it affords. So I expect the sustainability for RISE. I'm very confident that we can hit it. I think we've made some really like difficult but good business decisions to vertically integrate here. The writing was on the wall that it needed to happen. If we didn't have RISEx today, I'd be worried about the position we're in. So yeah, I'm really excited to get this out, get some users in. We're going to be able to show some very impressive numbers in hopefully not too short of a time as well when it comes to perps volumes, open interest, just that compounding growth I think we can deliver on. I'm pretty excited about. Okay, I'll move on to the next one. What's the hardest unsolved problem in RISE today? I think we keep talking about it. I think it comes to liquidity. What are your thoughts here, Avi?
Yeah, I think it comes to liquidity and just it comes down to like getting good liquidity and also just again like scaling properly, right? Like when you're building a perp stacks, you kind of just want to open the floodgates and just let everyone in all at once. But it's just responsibly scaling, right? Because at the end of the day, we want to get to the point where we're processing over $1 billion of volume, right, a day. But we know that will take time, and like the systems need to be able to handle that, and you can't just do that out of the gate day one. Like even if you look at other competitors that are some of the biggest in the space, it took them months to reach like where they are. And I think it's just being cognizant about that. It's like making sure that you're doing the right things at the right stage. That's really the best way to answer that.
Like even look at the hyperliquid with the Pepe issue today. Like these are really tough problems to solve, and if we are we have to do this responsibly, and we have to scale responsibly, both for the longevity of the project and to protect users as well. So I think that is probably I think just that that growth is going to be like technical growth, being able to open up. Like there's a lot of push for us to open up more, but we're going to have to be quite principled about it, I think. And then I'd say, like once we get to a point where we grow in confidence in the product and we're willing to scale things up quite a bit, I think the next problem, the biggest unsolved problem, is actually distribution outside of on-chain participants. So we're quite confident that we can onboard users, and we're going to build a product that a lot of on-chain users like and enjoy. We know these users. We spend a lot of time talking with these users to see what's important to them. So we built the product tailored towards them. But we do have to extend outside of the crypto market. If you look at Binance, their daily active users range between 1 and 3 million per day. Hyperliquid, as a comparison at the moment, is about 30 to 40K daily active users. Hyperliquid has a very high concentrations of very highly valuable users that trade a lot. Binance is more on the retail crowd, and I think Binance solves a problem about access, regional access. And so at the moment, if you're a decentralized exchange and you want to onboard users that don't currently have USDC or USDT on chain or a MetaMask wallet, you essentially have to tell them to go and onboard through Binance first before they can come to you. So that's like launching a neobank and paying that like user acquisition cost to onboard a user. But then when they get to your website, you're telling them, hey, can you go sign up with JP Morgan first and then come back once you're done? And that friction is just like it's too much to onboard the users. So that's a problem we also have to solve, and we have to do it in a cost-effective manner for users, so they're not getting wiped out by 500 basis point fees on and off ramp as well. So that's a difficult problem. I consider that still unsolved. Brilliant. All right, we're a bit over time, but it was great having a chat. Thank you everyone for jumping on, and I appreciate everyone that brought these great questions as well. This has been fun. Avi, I'm keen to do this some more. We'll bring on some more of the team, some more of the community, some other builders and partners we're working with as well. But yeah, let's wrap it up there. Thank you, everyone.
Cool. Thanks, guys.